things. Welcome to this closing plenary session entitled, Is Fintech Really the Future? I've lost my remote, there it is. I'm Sam Mendelson from e-MFP. Over the years, we've learned the importance of making the closing plenary as fast and as interactive as we can. We've had great successes, some that haven't gone so well, but we know that people are tired, there's wine waiting, there are trains, planes to catch. But with that in mind, this is going to be a session with quite a few polls, quite a bit of interaction from you. So please try and hang in there. We're going to try and make it move fast and make it interesting. The role and future of financial technology is hardly a new topic. You could even consider this title like a bit of an homage to something that could have been 10 years ago. But my feeling as a relative layperson is that we're at an inflection point that works, that's worth discussing. The title is adversarial because this was originally going to be an adversarial debate, and we've made it into more of a fireside chat, but we've kept the title. But to kick things off, I'm going to speak for just a few minutes to introduce some ideas. I'm going to introduce firstly a couple of quotes. Anyone who's ever read The Compass will know that I love doing this. So this is one by Douglas Adams. We no longer think of chairs as technology, we just think of them as chairs. There was a time when we hadn't worked out how many legs they should have, how tall they should be, and they would crash when we tried to use them. And Aldous Huxley said, tech progress has merely provided us with more efficient ways of going backwards. So what do these two observations tell us? First, technology is not a binary state. It's a process, it's uneven, and it's incremental. So when we examine whether it's valuable or not, whether it's working or not, we can only look from the present to the past and not always to the future. Second is that not all technology is progress. Some of it is regressive. Sometimes it can go backwards. I don't know how many people in the room wish that social media could be uninvented, but I suspect that there's one. Thanks, Laura. I suspect that's not going to be one of the polls.
Anyone with children.
Yeah. But I suspect there's a significant majority of people who would like it to be uninvented. So how do we know whether we're using it, however defined, to make progress? These are the big issues of the day, and they go beyond inclusive finance, but a lot of them overlap. What have we seen in the sector in recent years? We've seen smartphones become affordable to most people, mobile wallets, data analytics, affordable CBS, emerging AI applications. And because of this, smallholder farmers, marginalized groups have access to financial services in ways they never did before, and providers can collect data more efficiently, use them to respond to clients' needs and reduce costs in doing so. So brilliant, awesome. We can all go home to answer that question, but of course it's nowhere near as easy as that, because think about the questions in our broader sector, the cautionary tales about technology, social media, erosion of truth, more sophisticated fraud, cybersecurity, not keeping up with the efficiency of attacks, the unknowing consequences of AI, including algorithmic bias, and then the proliferation of nanocredit, and gambling addiction. It's a long list, and no one in this room needs to hear everything. So these are issues that are in broader society, but also in our sector. Most of this is not going to be new. But there are opportunities being missed too. How do we know if it's having the impact and the outcomes that we claim it is? Is it reducing or even exacerbating gender divides? Put another way, how can technology that doesn't put the client at the center in a human interaction ever be compatible with the mission that this sector always talks about? So before I turn to my esteemed panelists, I'm going to show you one quick slide. This is the Compass survey that e-MFP produces. And this is the most recent one from this summer. I don't know how well that's shown up on the big screen, but it doesn't matter. The point is, for the 7th straight year, client-side digital financial services and institutional-side technology were again near the top of the most important trends. But there was a new one. We asked about fraud against customers for the first time. And among FSPs alone, it was almost near the top. And all the comments said overwhelmingly, full-throatedly, that the practitioners are very, very worried about this. But this is something that gets missed. And of course, we've just heard next door that in the catapult pictures, for those of you who are in there, that it's not just about digital transformation, it's about new entrants, ostensible disruptors as well. Thank you very much. And what an exciting list this is, of which I think 6 next door were presented, but they're replete with new ideas. So this is we only have a short session and an unlimited topic. And so firstly, everyone here is happy for you to ask questions through the session. We don't need to wait for the end. Just put your hand up and try and keep your questions short and direct. And those online as well, someone at the back will collect them. And a big welcome to Nasir and Sahana for joining me on here. I won't go through their bios. So we're going to start with a poll. I hope that is legible. Please get your phones out. You've all done this before. QR code. The technology fails us now, then we've pretty much answered the question, haven't we? If you could take a minute to read these, and I'll read them out for if that's helpful. Which of the following statements is closest to your own opinion? Okay. Technology is indispensable, the only path to solving the greatest challenge in financial inclusion, which is high cost and inefficiency, and this should be the sector's primary focus. That's A. B, technology is a mix of, on the one hand, supply-side fads and scams, and on the other hand, client-centric solutions. Overall, it's increasing access and usage in financial health. The concerns about fraud and privacy and over-indebtedness are mostly overblown, and we can mitigate them. That's B. C, technology is inevitable, but there's a big chasm between idea and implementation. So, and while lowering costs and increasing inefficiencies is good, graduation of people to the formal sector requires more human interaction than any of this is going to have. That's C. And finally, technology is fundamentally incompatible with social mission because it widens gaps, removes critical human interaction, lacks safeguards, and is endlessly hyped by profit seekers. So I think it's obvious what we've done there. Those are 4 positions on a spectrum. And in a minute, we're going to show the results. I hope this is working. I think it is going to work. And so now I'd like to turn to my 2 guests here. I'd like first to ask you, what do you think they're going to say? What do you see as the dominant perception about technology? And secondly, what do you yourself think? Or put it another way, what's the status of financial technology right now in the sector? Nasir, do you want to have first go at that?
Sure. They're going to say B.
You think B will be the most likely? Yeah.
Yeah. You know, as I say, ideas are 2 a penny. The world has become better at understanding execution. There's a lot of dilettantes still in the market. Capital is still free flowing everywhere. And although some people may doubt that, I mean, compared to the way a business would start 20, 30 years ago, where you try and go get a bank loan, nowadays equity financing seems to come out of every orifice there is. And there's a huge focus at the moment on the developing markets and impact finance, because we've suddenly realized, I think I'd say over the past 7 or 8 years, that doing good can also make money, right? And the market opportunity in developing markets is huge. And that is where people see new wealth. And given that there is a lack of infrastructure in most of the developing markets to the financial ecosystem, particularly outside of major cities and even in the major cities, the opportunity is vast. You know, you're looking at previous examples of Catapult alumni. I remember one that sticks in my mind, which was from 2 years ago. A guy set up a company called Yalla, based in Egypt. He'd launched the company in July. He was on the program in October. He'd already acquired 6 million clients, users, actual users. I think he's up to 20 million today. 80 million population outside of Cairo and other major cities. Nobody has access to financial services. If you can enable that, deliver value add, allow people to gradually factor into that financial service system, you're doing a good job, and that opportunity is vast.
Sahana, do you want to reply on the last point? But can we start with, which would you have chosen? What do you think the room has picked? Do you agree that B is the plurality position?
I'm going to say the room is with me on number 3. So it's inevitable. It's already been proven, right? We have a lot of technology all over the place. But as a sector, we focus on the most vulnerable. And I think we do need more linkages between implementation and the idea, and a bit more hand-holding. I would have gone with 1, but I'll take a more conservative approach.
All right. Well, let's see what everyone said. Okay. Interesting.
Oh,
interesting. 55. That means, okay, that's cut off the bottom percentage, but we can see it 0. Wow. everyone in the room, this has worked,
Oh.
right? You did actually put up your hand if you voted, just to.
I think I can
Okay,
work
we've
out
got-
the numbers here,
All right.
actually.
I'm just checking that it didn't only work for 2 people or something. It's changed as well. Okay, interesting. I want to start negatively. I want to I want to talk about client protection, the adverse consequences of technology in the sector now. I put it to you both that, as I alluded to there, or in one of those, that digital financial services is incompatible with mission because it depends less on human interaction, more automation, and it takes the client from being not a customer to being a product or a data point. And when you shift gravity away from access and responsible finance and towards speed at cost at almost any cost, is it actually possible to have, is it truly possible to have client protection when you're serving low-income groups?
Sam, I don't agree with you at all.
You don't accept the premise?
No.
Okay.
I don't think people are treated as a product. And I think, look at social media. How much of empathy and connection and communication is happening across just virtually, right?
You don't think we're social media products?
No, I think that there's a lot of empathy and humanness to how you interact with a client and how you can get a client to use a digital product. Where it goes wrong is if you are intentional about the negative impact and you're intentional in doing no good.
Do you want me to answer?
Yeah,
that?
please do.
I completely disagree with you as well. I don't understand why it matters that, say, Google, Facebook makes money from us as a product, because they give us so much value, right? Maybe they did things wrong at the beginning by not being transparent that data is their currency, but you have to be really bloody naive that you're getting Google Maps with the cost of deployment for free. Obviously, they need to generate some sort of income. Now, in developing markets in particular, the data is what is going to get more people access. And I don't think most people, quite honestly, from talking to the entrepreneurs we've worked with over the past years, I mean, when they're starving or because of a flood, they can't feed their children, where if their data is being utilized in order to give them some access to financial services, I know which one they're probably willing to take. They're not worried about the data, because quite frankly, their data for them is if whatever they can use as a currency to be able to do things is worthwhile. Now, if that data is then exploited, now then we need to look at what does that mean, exploited. If it does them harm, sure, but that's what regulators are for, right? I mean, they're all still regulated activities in all these developing markets. But I haven't seen much being done in terms of harm to these societies, quite honestly. And if there is, then it's being caught pretty damn quickly. I mean, the people that are setting up these businesses are doing it often coming from having felt those problems themselves and trying to resolve them. I mean, 80% of the firms we dealt with on Catapult, they felt the pain and they want to make sure others don't feel that pain. And there is an altruism. I mean, you're looking at it from this horrible situation that seems to have become a virus for financial services globally, that completely opposes the fundamentals of human nature and of law, which is we are innocent until proven guilty, whereas all of financial services and what you're stating there is that everyone's bad and we need to make sure people are good. I mean, that's not true at all. I think people are good. People do have good purposes in general. And yes, we do need to protect against the bad actors, but assuming everything is going to be bad, that's just horrible. Look at what's happened to the Western world's banking sector, because it treats us as though we're all criminals all the time, right? I hope that doesn't happen to developing markets, quite frankly, because it's a disaster. I mean, who here enjoys banking at the moment? It's a pain in the ass. Has anyone tried opening a bank account recently? I mean, you are treated as though you're a bloody criminal, right?
And
it's horrible.
Right, or going to a website for the first time, or even the 50th time, and you have to, with cookie questions. Yeah, I take that point. Does anyone want to jump in on this point before, in a minute, we're going to look at some risks. And let's do another poll, because there are other adverse, okay. I think many people in this room are familiar with the DFS standards that Cerise SPTF have been working on, and the culmination of 2 years of work. And those are in 5 broad themes. But look at this list, and it's a non-exhaustive list of risks that the standards are seeking to address. And I would like you to choose which you think are the most important that standard setting should try to address. And you could choose up to 3 here. Is it working for everyone? You should still be able to, you can see it now. Okay, so there are 7 there. Some of these will look quite familiar from client protection standards, of course, but you can choose up to 3 there. What's the most important issues, negative issues that we should address? We will, I promise, come to some more positive stuff at the moment. I did it this way around. Okay. What do you, I mean, you must both accept that there are risks, and there are that particularly there are differentiated standards of responsibility, duty of care for those who are more vulnerable, poorer, less educated, and what do they need to be protected from?
I'm going to respond indirectly a little bit. I'll tell you a story, right? Generally speaking, the world's evolution since the beginning of humankind is prefaced upon what are called 24 general purpose technologies, right? GPT is not the same as a chat GPT, general purpose transform. Right from, the fire, the invention of the wheel, steam engines, computing power, nuclear power, and now the latest one is AI, right? Tell me which one of them didn't, as well as providing value, come with additional risks and new problems and challenges. They all do, right? Risk is inherent in everything we do. We cannot totally eradicate risk, but in order to move forward, we can't always be scared, right? We have to always accept that there are risks. We can manage and mitigate them. Of these things, without any question, I think in developing markets for financial inclusion, fair and respectful treatment of clients, responsible pricing and transparency, and a straightforward complaints mechanism, to me, are the most important, followed by data rights and privacy.
We're pretty sync on this, Nasir.
All right, let's see what everyone.
I can argue with you if you want.
We don't have to argue. So there we go. Okay, so they don't add up because everyone could choose 3, but you can see what's there. Cybersecurity and fraud, very interesting. Data rights and privacy, and RP&T, like you said.
But you've got the speech right there on the negative side, Sam. They're all following you. Cybersecurity and fraud.
Yeah, that's right. All right, let's, so far, this has been challenge focused. Let's change gear and think more positively. In what areas of financial technology are the biggest gains possible, or the biggest opportunities to be grasped? This, the bottom one, I think is slightly cut off, but I hope you can see it. All right, you've both seen this list. You can't be surprised by this. We accepted that this is an okay list. Where are the biggest opportunities here? Please choose up to 3 here. Delivery of non-financial services, which includes, but is not exclusive to financial education, agri-finance or smallholders, gender gap, stroke empowering women, serving the very poor or previously unreachable segments, product design innovation, improving the user experience, reaching SMEs, MSMEs, and the last one is identifying and authenticating clients or transactions remotely. That was that's your favorite, isn't it? You asked to have it added to the list. Can you explain why it's so important?
Well, I think everybody has a fundamental right to be identified or to have an identity, right? And a lot of us ignore that when we talk about the broader financial inclusion, access to finance, etc. How do I know whom I'm giving a loan or a service to? And how do I know who's using that? So I think that's, a fundamental rail. We don't talk about it much in the sector. We're starting to, if people have heard of digital public infrastructure, we're starting to see how digitization can actually help a nation, a people access more frictionlessly, access more, and access more securely. So I thought it would be a miss if we didn't have it on the list.
Agreed.
And then I think you're very poor is subjective, right?
Mhm.
Like I could put the smallholders in there, I could put the gender in there. I
Right,
could
they're
put
not
the-
discrete segments, of course. But that's the problem with the list. Is there anything you want to add or choose from that?
Not really. There's some superficial things in there. Product design, user experience, I don't think are particularly important. If you've got a good value proposition, product design, user experience.
What the
is
market
secondary.
takes care of it is what you mean.
Exactly. So I think what we've seen over the years, again, with Catapult, agri-finance, very big in terms of the impact it can have. Micro insurance services.
Like making markets or linkages. Like what is there an area of smallholder that's most interesting to you?
Insurance, more than anything, insurance coupled with education. We've seen many firms and the success of those firms and various different solutions around there. I mean, one of the biggest firms that we dealt with and is booming in Africa is a company called LHoFT, providing basically financing for tractors, but also the Uberization of tractors so that communities can buy a tractor and then lease that tractor to neighboring communities as well, and therefore create income. And that's created massive positive impact, right? But then also is the education of how to maintain the tractor, look after the tractor, better crop yields, etc., leveraging satellite data, insurance, weather forecasts, etc., right? I think that's a huge impact because ultimately provides food, right? I mean, I still remember the Ethiopia famine way back when, right? And the disaster that created. And that, as Sahana said, there's a massive overlap amongst many of these things. We've also seen some very good solutions about empowering women, which have been great as well, and problem in particularly acute certain communities in Africa in particular. I mean, there's a lot of important things there, but fintech is helping most of that.
And I think I'd like to touch upon the education a bit. We were in a session on climate finance and strategies earlier today, and we were talking about instead of just sensitizing the person we're giving a loan to, how about sensitizing the whole community or even children at school on what is, climate change and how do we be more responsible, et cetera, et cetera. So if you take education, in the broader sense,
Yeah, not financial literacy.
Yeah, not just for how to use a product or why are we giving a loan or you have to refund it, et cetera, but broader sense of, how do you manage your budgets? What does it mean to save a little bit? You should all save. What does it mean that, there's global warming, et cetera? If we were to take education literally and deliver it through digital rails, and in concurrence with the access to finance or whatever we're providing, and it provides a more holistic approach than just that financial service. And I think there's a huge role for education as well.
Yeah, perhaps that should have put a discrete item on the list. I put the results of it. You can see you've the one you added is top, and delivery of non-financial services. Interestingly, despite its superficiality, reaching the very poor. Would anyone, by the way, if you'd like to jump in now, feel free. Does anyone want to make the case for that one, for sustainable provision of services to the very poor, unreachable segments, or an example of how technology is doing that? Sure. Get this lady the mic.
I'm a participant of Catapult.
Yeah, hi.
This year's 10 fintechs, and I deal with data. My company is called Action Zone, and we are a data forensics firm from Uganda. And we've seen that identifying and authenticating clients is one of the biggest ways you microfinance institutions say, now we know you, now we shall give you our money. Because your earlier question is, and the reason we came into business is you say, we don't know you, so we will not finance you. So now what we've done is we've gone ahead to the communities, data collection and credit scoring, location-based data, ensuring production data. Since you don't understand farming and agriculture, because you're bankers and financiers, we make sure that we give you this data so you understand production data, you understand how much yield the farmer is going to get, but you also know their behavior in terms of finance, in terms of transactional history. And so this data has helped a lot. In Uganda, we have about 687,000 households that have been profiled. And I'm working with one of the banks in Uganda that has given already 43,000 loans using this data with this credit scoring.
So you're primarily talking about identification and authentication.
Yes.
You're making the case for that.
Yes.
Anyone want to make a case for any of the
Thank
others
you.
while we're here? Maybe the either the non-financial service education one or reaching the very poor, or with a question, or we can do it at the end. Yep.
Tatiana Triodes, not making the case, actually asking a question. So one of the promises of fintechs or digital is that indeed reaching the very poor, including the excluded. I haven't seen it. What I've seen is that we're including by other means the already included. So I would like to ask this Zal here, do you have any proof that the very poor are reached digitally?
The World Bank's data shows very clearly and attributes the massive, and it's an massively accelerated change and positive change into trying to structure this, of more people being included into the finance system is largely attributed to technology. And that's not people that were already included. This is World Bank data that says the number of people that are excluded, the last data I saw is down to 1.7 billion around the world. Prior to that, it was 3.8 billion. So nearly 2 billion people have been included largely because of technology.
Yeah. I'd like to complement that as well with research we were doing, between the last Fintech census, I think, was in 2021. And before that, it was in 2010, if I'm not wrong.
17.
17?
Yeah, there's one in 17.
Oh, there's one in
But
17.
yeah, go on.
But just the jump, between penetration and, banked population in the statistics was crazy when you saw the last census and the next one. They jumped by 20%, 40%, and we were like, how is that possible? Well, they added mobile money accounts, into the statistics. And today we can say, okay, fine, it's plain vanilla in some markets, but back then you were actually including someone with a mobile money account, right? And those accounts are reported, even
but
if
not
it's
necessarily
true.
used, are they? I mean,
Well,
there are dormant
more and more
solutions.
now.
Right.
At the beginning, no, but more and more now. You can go to some countries where you can't get change because everybody is paying cents or whatever on a mobile. So the challenge we have now as a sector is that we've included those who were easily able to be included, who were excluded. Now we have a bigger challenge is we have to dive deeper. We're talking about places where there's probably no connectivity. We're talking about more vulnerable populations. We're talking about those who have been impacted by climate change, etc. So the challenge is harder. We've done the easier, low-hanging fruit part. And to Nasir's point, there has been tremendous progress. But we now have to work harder to see how do we continue to include those that are still remaining excluded.
It does turn on what we mean by included. I mean, that's a whole nother session, a whole nother topic, of course, but it really does turn on what we mean. I mean, if it is the ownership of an account or that's very different from meaningful usage.
And there has been huge progress in the thought around what is included as well. And just because you give somebody an account on onboard somebody and make a first transaction is not. And you look at active use rate. So you're looking at actually usage of the account. And I think as an industry, we have made progress towards that. And there is big focus on use cases instead of just opening the account. I think we have.
Yes, this is Budur from Microfund for Women in Jordan. It's a very interesting topic and lots of debate of it. I agree with you that FinTech has included more people, but I still agree with her. It also excludes, we're still in the transitional period of using technology from all people around the world. So some of them, they are all outside the system of data. So relying only in data means they are excluded. And so yes, still needs a very careful consideration for this segment of people. I believe there's a future opportunity for fintech companies that is not mentioned here. It's partnership, because again, we appreciate data, but we still need this human touch for understanding. Today in the morning, we were talking about context. There are lots of things that data tells us when we analyze it, but there are lots of missing things. For example, in MFIs, we went to digitalization and we were very happy about it. It gave lots of insights. But now we need to go, now internally at MFW, we all say, go back to the feed and see the people, because there's a lot about how we get the data, how how it is classified, etc. So I believe maybe fintech companies are there. There are the traditional financial institutions that have been working. Definitely, they have learned a lot. And maybe there is an opportunity for partnering or partnerships where each party can bring its value to this partnership to serve people and to achieve financial inclusion. Thank you.
Absolutely.
That's a nice segue to the next poll. We're going to do two more, but I'm glad we're getting some questions, so please do keep them coming. This is a artificially simplified question. We know that, but do your best. The promise of financial technology will be filled primarily through which of the three models? Digital transformation of traditional providers, NBFIs, MFIs, banks, etc. New entrants, fintechs directly serving clients, some of which the models examples we heard in the catapult session, or partnership models between the two. I think we know where the strongest response here would be, but would anyone like to talk about, make the case for any of these three? Would you like to have a go, or should we ask them?
I'm all for
Please.
partnerships, so I think
Pro partnership. Okay.
pro partnerships.
Is it because the core competencies of each are so separate between an organization that is so used to appraisal and that sort of high touch interaction, and they can't possibly do what a fintech or a startup can do, and vice versa? Or?
I think over and above competencies, it's about just the DNA. I think if you're only focused on the tech and you're only focused on the field, I mean, you have very different approaches to things. So even over and above the expertise, I think just convergence between traditional and new age gives for richer and more hybrid solutions. That's what's needed. And we talk about high tech, high touch, etc. And for inclusion, I think we need a fair share of both.
Izzy, I think you probably agree, or no?
I do, but I have a problem with the question. Going back to something we discussed earlier, I hate this word fintech.
Yeah, when we were preparing for this, you said that, and I said, all right, well, you can talk about it too. So I'd said fintech, and I had meant it like, I suppose, capital F, capital T, as a sort of shorthand for disruptive institutional startup. And you said, no, it's short for financial technology, not tech companies, in a sense. And you were clear.
From the first day I started working in finance, I went into a trading floor and I had 6 screens in front of me. Why do I have 6 screens? They're Bloomberg, Reuters, Market. Nobody called them a fintech, right? They were just fundamental basis and part of the financial system, right?
Like the Luxembourg House of
financial technology, exactly.
So it's your problem is fintech, not financial technology.
Because I think the word fintech by itself, and I do remember I actually I was being interviewed by a research student this morning about this. I was recounting this story. I remember when it cropped up, it was a buzzword essentially created to differentiate certain types of firms and make them look sexy and cool for venture capitalists, right? In around 2012. I can't stand the word because I think it's created more friction than it has done good for many, many years, because it became a them and us, right? Banks, financial institutions, bigger firms said, those fintechs. Whereas you don't say that about Reuters, Bloomberg, and people that were there before. And it created a massive friction. The fact is, a fintech, if it's providing lending, payment, whatever, is a financial institution. It has to be regulated like a financial institution. Why is it not just a financial institution? A financial institution that provides those services also uses technology to provide them, right? So I can't stand the word because I hate this disparity.
Nevertheless, we agree that new entrants, we mean like startups, disruptors, right? We can call them fintechs as shorthand.
Disruptors, even that, I hate that word.
All right. Okay. Well, let's hear anyway what everyone else thinks, and then maybe someone wants to make the case for any of them. Well, there you go. Yes. Only 7% think that the dominant model for taking the opportunity of financial technology to new segments, etc., is by digital transformation of traditional providers. That's interesting. In this audience, that's interesting.
If I may add to what he said, Sam, what Nasir said, if we just look at traditional providers, right? I mean, as they digitize, they would become fintechs. or, you know, if they digitized well and properly, right?
Yeah.
They could also be called fintechs. I mean, a telecom operator can be a fintech, so can a microfinance institution that has its own wallet be called a fintech, right? So it's, I think the polarization between traditional versus a disruptor, you know, if we're talking about partnerships and conversions, we should start being more inclusive in how we describe them.
Yeah, that's a good word. Let's be more inclusive about it. But the hardest thing you can do, and this is fun, this is the data shows this, and it's you can see this in various discussions around business strategy, is to convert an analog business to becoming digital, right? Banks are useless at it. They really are. It's frustratingly bad. It's easier, particularly in a world of high regulation, to just throw people at the problem than to invest in and change the way you do banking using digital technologies. And we've seen that across all industries in the world.
I had a back pocket question I'd like to ask now, and maybe we can just do a show of hands poll on it. Within that area of digital transformation of traditional providers, is the low-hanging fruit the client side or the institutional side investment? Is it CBS, MIS stuff that works behind this, or is it on the product side for clients, or is that like a false?
You need both.
Yeah.
You cannot do one without the other.
You can. You gotta look at the system of innovation. Innovation occurs at 4 different levels, right? At the bottom, you have process, then you have product, then you have business model, then you have changing the basis of competition in an industry, right? Changing management. The returns are to scale, right? The biggest returns are at the top level, the likes of the way Ryanair changed the airline industry, right? The likes of the way Amazon changed the book selling industry. But the easiest ones are process, product, and most traditional institutions are still really only focused on process innovation, because there's still so much efficiency to be gained, right? As I say, look at onboarding, KYC, AML, distribution. The fact that, I mean, one of the biggest issues in the world of development is around aid, right? You know, distribution of funds during crisis or at any point in time, the loss that is occurring of collection of funds in Western countries and then transferring and distributing in developing countries is huge. And not just, I mean, there's a huge cost of the transfer and the foreign exchange rate, but then there's the distribution and channels, etc., to get it to the people that need it. I mean, this can all be digitalized and distributed much more efficiently.
So before we get on to the last thing I want to cover, anyone want to jump in on this? Yep, please, sir. We get a mic there. Try and keep it to quite short if you can.
I think if we are to make a significant change in as far as inclusive financial inclusion is concerned, then the new entrants have to be given the light of the way. They have to go direct and safe. Why I'm saying this is because the traditional financial providers have failed big time when it comes to reaching out to the mass market or the excluded market. They have a lot of impediments that it has made it impossible to penetrate the mass market. I'll give you, for example, you keep $10 in the bank. The next 3-4 months, you check your balance, it's below $10 because they've taken their ledger fees and things of that sort. If we go with the fintech, much as there's no much returns with the money that you give, you keep your $10 today in a mobile wallet, 3 years down the line, you check the balance will be the same. You only charged when you're transacting. So I feel like the fintech has more leverage. And if we are to grow and include more, the fintech is the way, neither the partnerships, because if we are doing the partnerships, we are partnering with the wrong partner who has failed big time to include. And then we're saying, can we partner? Most of the times they will fail or the strategy won't work. Thank you.
Well said.
He makes a fair point. The problem with traditional institutions is because of their analog business models, their cost to serve customers is very, very high. It is in no way feasible profitably for them to service certain types of clients. We've even seen that in Luxembourg, ING shutting down their bank accounts. They can't even do it in Western countries anymore, let alone in these markets, right? Because they do need to make money in order to maintain their operations, but their operational costs are so high. technology companies can do that at a much lower cost.
I agree that technology is more expensive at traditional microfinance institutions where they want to digitalize, etc. But in reality, fintech companies, thank you, fintech companies that we have seen, at least in the region, Jordan and Egypt, they price their products much higher than the traditional. In reality, this is what we have been seeing in the market, the behavior. So I hope that they know that they cost less, so they offer their products with less pricing. They are much higher. Their interest rate is much higher than us, though it's cheaper supposedly. And the other thing, maybe I don't know if it's coming next, but it's from reality. They are seen like over-indebting the market, because it happened that in Jordan, for example, they are not regulated yet. Maybe because they are called fintech, so maybe the regulator fault, but we know they are going to be regulated. But in the meantime, they don't follow the KYC, and they are new. They don't know the experience that we know, so they are really over-indebting people, and it's harming the whole market.
You want to come back?
So two points, that in reality, what we have seen, it's much more expensive than
I
traditional.
would say, just as a point of note, I'm sorry this is happening in Jordan. I completely disagree with you about Egypt. I sit on the board of Altera, the central bank's initiative for fintech in Egypt. So I'm very much involved in what's going on in Egypt. Don't ask me why I sit on their board. Somehow I got there. But so I've been watching that very closely. And PayMob, who's become the biggest distributor of payment services now, working with all the banks in Egypt, is incredibly successful. When you say indebtedness, yes, in some cases there are higher interest rates, but the perception of interest rate relative to the value add to a customer, I've had this discussion with somebody just last week actually, is if somebody, say on a micro level, right, needs to borrow, I don't know, the equivalent of 20 cents to top up their mobile because they've run out of credit and they don't get paid for a week, and is willing to pay back 23 cents the following week in order to get that 20 cents of credit, from an interest rate perspective, that's horrendous in reality. But in terms of the value add and the cost at the level, they're happy to pay it, right? It's adding value to them. Yes, without any question. We can sit here and judge people upon interest rate because we're sophisticated. But at that level, as long as they can afford to pay it back, and I do think that the ones that are paying extortionate interest rates, for example, I know in India, they've been totally thrown out. In Pakistan, they've been really shut down. But when the level is higher, because at a micro lending level, it is kind of a volume factory, and you do have to charge a little bit higher interest rate. But as long as it's still affordable for the person borrowing money, all right, it's adding value.
I know, can we come back to that one in a moment? I know we want to get one more little thing in and also leave time for the closing words, but I'll try and come back to you with that question, please. Last question, please. We've touched on areas of this, but this is a list, non-exhaustive again, of selected areas of financial technology, workflows at focus areas, whatever we might call it. You could choose up to 3 here, but the key is medium term. So let's think 5 to 10 years down the track. This is not in the next year or right now, but looking ahead, which of these 3 are going to have the biggest effect? Which are the most consequential? Would you like to give your 3? And I think I know what your 1 is.
Yeah, we need
DPI.
1. Why do we need 3?
You can just choose
It's
1.
hard.
You can choose 1. You don't have to choose 3. You can choose 1 if you want.
My pick is the last one on the list.
Digital centralized databases, or DPI, is Sahana's, which I knew already. Nasir?
E-wallets.
Really?
Transactions are the basis of creating credit history, which allows you to be included ultimately because you create the data points.
And is the innovation in the design of the wallets, or just getting them out?
Reaching.
They're already.
You create transaction
adequate
history, then you can start providing lending because you can build up a profile of a person.
Right. Wow, look at that. It's interesting because in the compass, AI is 20th out of 20 on the most important trends by far. Yet the session yesterday, the day before, was packed on real world applications, or like, potential practical applications of AI in financial inclusion. And it was standing room only, and it was clear that there is huge interest in this, but very low understanding of how it will manifest itself. That would suggest that that's the case. I'm not sure I know how it will, but it's whether it'll be
AI's
chatbots, or is it going to be an appraisal, or is it which?
It's part of the hype cycle with ChatGPT. That's all it is, right?
All right, you heard it here. You heard it here first. It's hype cycle. You're all wrong.
No, I'm a machine learning practitioner. I used to do it, right? So I'm not a dilettante in this. I used to run the algo trading desk at RBS in London. I know AI. To me, it's this hype cycle that's created with ChatGPT because we've suddenly put a user interface on it and everyone can access it. I mean, the mathematics has not changed in any way drastically over 20 years. Right?
But
more data, more computing power.
But which area of AI will be the most influential? Will it be on the like complaints mechanism, or
no? I genuinely think it's still, we haven't even begun to utilize predictive AI, traditional AI in financial services. Again, predictive AI, for me to be able to lend someone money just by simply getting their permissioned access to their address book on their old analog phone. I can tell, depending on how they store names in the address book, first name, last name, first name, capitalized, not capitalized, sentence case, not sentence case. If somebody stores fully capitalized names in their address books, they're 81% more likely to default on a loan if I lend them money, right? Because when you lend money, there's two reasons what you need to assess is their ability to repay and their propensity to repay. When it comes to nano financing, microfinancing, you're probably looking more on the propensity to repay, judging people's character. And that's predictive AI. That's not even...
I'm thinking of a former US president who always would tweet in caps and six times declared bankruptcy. So there you go.
Exactly.
We must wrap up. I'm going to give one last word to Sahana if she'd like on that point, or to make the case for DPI, for example, and then we'll take that question, and then we must go to closing words from Lucia. But would you like to come back on any of that?
Thanks, Sam. No, I think, there's been a big negative side and positive sides of India's journey on DPI or the India stack or Aadhaar, the digital ID. But I fundamentally believe that if we do create centralized databases that can be accessed in a responsible way, it's a bit of AI, it's a bit of the transaction history in the wallet, it's a bit of the identity of the person, et cetera, but as if we responsibly create data sets that can be accessed, we would fluidify the user journey, the supplier journey for making a decision, and fundamentally open up more access to financial services, products, non-financial services and products, and just have a more holistic approach to making all of this accessible affordably. So leaving everyone with that thought.
We'll take that one question if you would like, if it's still, and then we'll take one more from someone else, and then we'll wrap up.
Yes, I'm a little bit afraid this is going to be a bit controversial what I'm going to say, but to respond to Nasir, I'm very sorry, but when you're saying that if somebody is willing to pay 23 cents on 20 cents or exuberant percentage, if somebody is desperate enough, somebody is willing to give a kidney. Is that something that we are going to go with? So when we're speaking about just making money, let's say, and that is the only, let's say, purpose, right? And a lot of digital services providers could go with that. But here we're speaking about financial inclusion. So certain morals, certain ideals, I think are actually part of this whole value proposition. Personally, assessing impact and sustainability for a lot of fintechs that were brought to us for investment, I could definitely see the business case. I could not see any impact or sustainability story behind that. So I think I'm missing a little bit that part in your reasoning. In some instances, bringing Amazon into this story, saying, look at them, efficiency and etc. what has Amazon done to a lot of different local businesses? They're completely out of business. And this is actually what we would like to prevent, I think. So I'm sorry, I'm giving a rant. It's not really a question, but I really had to get it off my chest. Thank you.
All right. Let's take one more question on something else. You want to
reply to that?
Okay.
No, I just think, I mean, I am in the inclusive space, right? So I'm 100% with you, right? And that's what we're trying to do. We're trying to show the impact, and we're trying to say that we're all responsible, and we want to finance and we want to grow businesses that are responsible, right? The market reality is different. Not everybody is in the inclusion space. Not everybody is coming from our lens of we have to make sure that everybody is safe and secure, etc. So thank God we are there, right? But the market will people will pick up what they need, right? How many times have I heard families saying, in Europe, for example, there's not much how do you say, infrastructure for babysitters or baby care. It's very expensive, right? Compared to Africa or India or wherever. And you have activities, you have, birthday parties for you drop off and pick up kids, you have to work, you do the food yourself, everything. Thank God there's Amazon so that I can just pick up that gift, one day before I have to drop my kid off. People are not thinking overall, right? So this is what we're competing with when we look at the, inclusion sector. We want to advocate that, and we have to, but we're competing with those who don't think like us. And so where do you draw the line?
Why is it a competition?
Nasir asked, why is it a competition? Well, because we believe in something. And so when you fundamentally believe in something,
do you not think these guys believe in something, the catapulters?
No, I agree with you. I agree with you. I agree with you. But there are those who are not impact-driven. Catapulters are impact-driven. I mean, each and every one of them started with a story about how their fintech will impact something.
What I'm saying,
it's not mutually exclusive.
No, it's not mutually. That's what I'm saying. It's not. We've had now 90 alumni of Catapult program. I would like to say that we're pretty good ensuring and selecting those that create impact. That have those stories that make a difference, right? And a lot of them, I mean, some of the companies that have been driven because of the experiences they've had to their families, and the stories we had today, the person that couldn't afford hospital care for their child caught malaria and now can because they've got insurance services. The farmer that lost everything due to flooding because they had no insurance, but now can afford insurance at a reasonable cost, is also getting trained on how to manage crop yields better due to satellite data. That creates value. Mobility, providing opportunity by providing leasing functions to people so that they can own their own scooters.
Sure.
All of these businesses do create impact.
Sure, we're on the same page. I'm saying there are others that do not look at the impact that much, but can still thrive because they provide a value.
As I said, there's always bad actors, sadly, but I like to believe generally people do try for good, and our catapulters do.
All right, we have to wrap up there. It's 4 o'clock. If any of you would like to argue further with these two, there will be cocktail reception outside. Please, I'm sure they're sticking around for a bit of an argument.
I've got to go and deliberate and decide who wins catapult.
That's true. Right. Listen, thank you very much to you both for taking part in this. Gives me pleasure to hand over to EMFP's chairperson, Lucia Spaggiari, for closing words, and thanks to sponsor and everything. So thank you.
Thanks, Sam.
Excellent. That was a very interesting conversation. Thanks for this. So this year topic, refugees, internally displaced people. We saw the record number of displaced refugees. We saw the incredible human and technical complexity. But thanks to the European Microfinance Week, we also saw concrete solutions and projects and institutions that are working in incredibly difficult contexts that can inspire others to bring hope where there was no hope. Congratulations, first of all, to Rufi and the other finalists, Al Majmoua and Faten, for inspiring us. We can find the publication on this year's topic on the e-MFP website. Please feel free to ask also hard copies if you wish. We will make sure and do our best to not stop with this topic just with the award, but to continue the work and make this a continuous effort and outcome. This year, there were also other topics, and this was also thanks to the new members of the e-MFP, which we welcome and thank for their contributions. So we heard about women, financial abuse at home, AI, youth, entrepreneurs, biodiversity, and we will continue exploring frontiers with you. We'd like to thank the organizations that are making this possible and the sponsors. A special thanks to the Ministry for Foreign Affairs, as well as Charles and the Good Vibes team, the Secretariat and the Abbey. This year was the historically highest number of participants to the event. So we are extremely grateful for you attending, and we hope that you will come back again next year, where we will also have a new name. With a lot of excitement, we will all learn best practices in inclusive insurance. So keep posted and enjoy the cocktail before going back home. Thank you.